everyone. In this video, we'll go for the internal health checkup from GST perspective, and also we'll go for the demo of our internal health checkup tool hands-on session. Yes, as we all know that today a lot of litigations are there in GST. We all are facing multiple litigations. Daily notices are there. Department come up with audit, scrutiny, and assessment. And as there are number of financial transactions in the books of accounts of our client, now it is very difficult to track and trace the matters, track and trace the issues. And at the time of departmental audit, at the time of scrutiny, at the time of assessment, departmental authority will come up with a very huge amount of notices, very huge amount of demand. And due to that, client may say that, sir, you have conducted all the compliances, you have filed our regular return, our annual compliances, why this huge amount is there, and how we can provide one additional service to our client. To provide a resolution of all these things and to provide a exclusive report to our client, we have developed a Excel based tool. In that tool, we'll cover how we can track and trace the issues which is there in the business, how we can consult our client, how we can take the preventive measures. Okay, as at the time of litigation we have to take some measures, but through this particular Excel utility we can take prior actions, and we can save our client from the future litigation, from the huge demand. Okay, so in this particular session I'm just going to give you a hands-on to our internal audit tool. We'll discuss each and every point which is there in that Excel tool. Okay, if you have any further queries, if you have any further concern, you may connect with us on WhatsApp, and you may comment your any queries or any doubts in the chat box as well. So I'm just going to share my presentation, the Excel tool, and then after we'll discuss one by one. Sir, this session is going to be a very interesting session because we are taking our discussion completely on the basis of Excel utility, and I will not take your much more time. We'll conclude the particular discussion within 30 minutes. Okay, so I require your 100% attention on the screen. Now, from this Excel tool, you may generate the PDF file. Okay, easily. You just need to click generate PDF. PDF will be generated. Okay, or you may provide this Excel file as it is to your client, or you may keep this Excel file in your office for your records. Okay, because nowadays this is very important that whenever there will be a litigation, we can provide the data in a very simplified way. So for that purpose, what we can do, we may conduct this type of internal audit for our client on half-yearly basis or on annual basis, so that we can take the rectification oriented actions before any litigation. Okay, and if you will provide these type of reports to your client, you may charge some extra fees for doing this type of exercise. Okay, so it will be additional service, it will be a new area which may explore. Now, internal audit report 2024-25, just for the financial year. Here you just need to put the firm name and address will be there. Accordingly, as you are doing this particular type of report as a chartered accountant, as a GST consultant, as a tax practitioner, you may mention your firm name, your own name, contact details, mail ID, date and place, so that if your client will forward this report to anyone, in that case also they will get contact detail of yours. Okay, next, journal queries. Before moving to our reconciliations, we'll just need to ask some queries for our client. Okay, and for that purpose we have created a exclusive list of queries that you need to ask with your client. First name. Before conducting this particular type of industry, or before going for this particular type of internal audit, you should have one meeting with your client, so that you can ask necessary questions. First question you need to ask, sir, what is your nature of industry? So that when you will get the idea about the nature of industry, then only you can easily go for the further things. Okay, the main problem is that client is coming with us for filing the return, we are taking the data from him, and we are supposed to start the filing of returns. Please, first we need to identify what is the nature of activity, what is the nature of industry, whether it is a textile industry, and if it is a textile industry, then the person is involved in manufacturing or trading, or that person is involved in job worker related activities, so that our audit process will go accordingly, move accordingly. Next question, status of your industry, whether your company is a proprietorship, whether is a partnership, whether company, whether LLP, so that we can easily analyze the applicability of provisions. Okay, कई बार होता क्या है, we have idea about the industry but we forgot to take the exact nature, to take the exact manufacturing process. Because as a chartered accountant, as a GST consultant, as a tax practitioner, I am a partner of my client. So we need to do accordingly. GST registration certificate. When you are going for this type of internal audit, you should take the GST registration certificate so that you will find out that what is the principal place of business, what is the additional place of business, or if there is any addition in additional place of business, the same has been reported on GSTN portal or not. So through the GST certificate, we may confirm from our client that, sir, these are the addresses which is mentioned on GST registration certificate. Just confirm us these are perfect or there is any change, so that accordingly we can take a necessary action. Otherwise, if departmental authority will come for audit, assessment and scrutiny, they will say that your place is not added. So they may treat it as a supply and charge GST at that time. No option will be there. So we need to be very much careful, sir. Next, list of HSN code, SSC code. Sir, to check the product and services, you may demand sample invoices from your client. You may check the HSN and SSC code which is mentioned on the invoices are in line with the HSN and SSC code which is mentioned on GST and common portal. Otherwise, what will happen? Department may say that, sir, you have not mentioned perfect HSN or SSC code on GST and common portal. So we need to be very much careful from that perspective. We need to demand the financial statement, that is audited financial statements, so that we can go for an analysis of various terms which is there in your profit and loss account. We need to check whether the GST has been paid under reverse charge mechanism for the expenditure which is covered under section 9 subsection 3. Whether any expenditure which is there for which reversal is required, whether the same has been done or not. We may check the other income, whether GST has been paid on other income or not. We may go for the analysis of balance sheet. We may check that the fixed assets which is there, any addition, then GST has been claimed, any deletion or any sales during the year, whether GST has been paid or not. All the transactions, if any special transaction, then valuation has been done perfectly or not. Just for example, if there will be a branch transfer to another state, in that case valuation should be as per valuation rules number 28. So we need to check whether the same has been done or not. Sir, we also need to demand the financial statement system generated, so that we can easily check that there is any variance between the system generated financial statement and the audited financial statement. All the necessary adjustments has already been done in the system generated financial statement or not. Because kai baar hota kya hai, at the time of audit we may make some changes and we forgot to make the changes in our books of accounts. It may create some issues. So we need to think from that perspective also. Form number 3CD. Sir, we need to take the form number 3CD so that we can easily verify any related party transactions. Because we have 48(2)(b) in form number 3CD. So any related party is there, then we may easily confirm whether the valuation has been done perfectly or not. The closing balance of ITC is reflected or not. The clause number 44 ITC bifurcation has been made or not. So these type of things we may verify through form number 3CD. जब आप ये सुन रहे होंगे ना, आपको लग रहा होगा, sir, that it will take a lot of time. It will take a huge amount of time. Not at all. If you will do it strategically, then it will take very less amount of time. Just you need to plan it. Okay. As this is the hands-on session, so I am going to discuss each and every tab of this particular internal audit report. Okay. Throughout the session, I request if you have any queries, any concern, then please put it in the chat box. I am here to respond. Okay. And those who are watching the recorded videos, I request, sir, if you have any query, any concern, you feel free to connect with us. Okay. Form number 26AS. Sir, form number 26AS, you can easily verify the income part. All the income has been mentioned in the profit and loss account or not. कहीं ऐसा तो नहीं है कोई income जो 26AS में है, but we forgot to report in our financial statement and GST has not been paid. So in case of audit, assessment, scrutiny, departmental authority will check 26AS and accordingly raise the demand. So we need to do this exercise right now. The creditor's ledger. Sir, we need to make the payment to the creditors within 180 days. Otherwise, there is a requirement of reversal of ITC with interest at the rate of 18%. So we need to demand the creditor's ledger so that we can easily calculate the ranking age wise, so that we may save our client from the future litigation. Sales register. So demand the sales register so that we can verify that the sales register sales, the total sales is reconciling with the sales which is mentioned in the profit and loss account. Because this is an internal audit, we need to check the internal control as well. Just for example, Sir, sales register, if you are taking the total and you are reconciling it with the profit and loss account sales, if there is a variance, it will give you an indication that there is some issue on account of your internal control. So that point is also very important for all of us. Purchase register, we also need to check, sir, purchase register, that input is eligible or not. We need to check any purchase which is at the end of month. Suppose any purchase on 30th of April, then we need to ensure that whether the same goods has been received or not. So for that purpose, when you will check the purchase register, keep it in Excel, put a filter, find out the monthly entries which is at the end of month. Check any entry as on 30th of April. Just for example, you are in Jodhpur, Rajasthan. The goods has been bought from Maharashtra. Then ask your client, it is possible that you have received the goods on 30th April? No, within one day, not possible. So in that case, whether you have claimed the input tax credit or not, because as per section number 16, subsection 2, it is the mandatory condition, you will not be eligible to claim the input tax credit without receiving the goods. That type of assurance we need to take. Discount ledger, we need to check whether the discount has been accounted very specifically or not. The trade discount has been mentioned very carefully. The GST related adjustments has been done or not. Interest ledger, we need to check whether there is any financial interest or trade interest. If the interest is trade, that is due to business transactions, then GST is applicable. If the interest is financial interest, that is due to unsecured transactions, in that case no GST is applicable. So both bifurcation, segregation is required. All related party transactions from form number 3CD we have taken, and we need to check for the valuation. List of employees we need to take, so that we need to verify the transactions between employer and employee, as no GST is applicable, so we need to check the same. Item wise purchase summary, so that we can easily track and trace the heads of purchase. We may check any ineligible purchase is there or not, and if ineligible purchase is there, then whether ITC has been claimed or ITC has been reversed. So we need to check. But for a idea, we need to take the item wise purchase summary. This is also a must essential document, and each and every accounting software is competent to generate this item wise purchase summary. Expenditure ledger, so that we can check the nature of expenditure and we can easily find out the RCM applicability or ITC reversal applicability or ITC eligibility applicability. We need to take the income ledger, so that we may check the other income part and whether GST has been paid or not. Trial balance, we may check the significant movements. When you are taking the trial balance, take it opening, closing, debit and credit, so that you may check the movements of inventory, movements of your debtors, movement of your creditors, movements of your various line items, so that if you found any huge variation, okay, in that case it will give you indication. So you need to check the detailed thing. Through this internal audit, our responsibility to check each and everything. But sir, try to understand, we also need to go for a prima facie analysis, so that we can find out that this is the area on which I need to give more focus, this is the area on which I need to give less focus. That also we need to go, so that our planning will be in a very perfect way. We need to take the all ledger as well, so that during this audit process, if we found anything and if you need to check any ledger, we have all ledger, we can easily check the same. Because for this internal audit, if you will demand multiple documentation multiple time from your client, then it will create some irritation. So what you need to do, you just need to demand this documentation at the early stage, so that during our audit process, we need not to ask any documentation. At the end, we'll just go for an exit meeting with our client and discuss the issues and take the rectification or preventive actions. I hope you all are getting the point. Sir, are you enjoying the session now? Just confirm me once in the chat box. Refund calculation sheet. Suppose during the particular financial year, that person has claimed the refund and departmental authority has passed the refund as well. But we also need to demand the refund calculation sheet, and we need to cross verify. Because there may be chances that the refund has been passed due to certain issues, due to licensing. But if there will be an issue in the calculation sheet, in future department may ask for interest penalty. So we need to go for a cross verification. Export specification. If the person is involved in export and claim the refund on account of accumulated input tax credit and made the zero rated supply, then we need to ensure that the amount has been received in foreign currency. The sales has already been made. The supply has already been made. And export, we need to verify from IEC Get portal. As through shipping bill number, you may check easily the IEC Get portal. So do this particular type of exercise. Input service distributor or cross charge. If this particular industry is involved in the ITC transfer as an input service distributor, taken the centralized services and distributed the same to various branches on behalf of branches, or services utilized by the branches, in that case ITC should be transferred to various branches. That should be done through the ISD, input service distributor. So check the ISD calculation. Sir, prima facie, these are the documentation which we need to take. We need to select the appropriate action that received yes or not, and any specific remark we need to put. There may be chances the ISD is not applicable, so we need to put in remark not applicable. And in case of required fields, we need to put the data. So that this particular sheet will give you an idea that all these documents are available, and you have also done with the purpose of that particular sheet, that is also mentioned. Okay. Then we have the next slide, the next sheet, that is turnover reconciliation. Turnover reconciliation is also again a very important reconciliation. In that case, we are reconciling our turnover as per audited financial statement. If audit has been conducted, if you are doing this particular type of audit on half-yearly basis or annual basis before income tax audit, then you may take the provisional financial statement generated from the accounting software. Compare with the GST records, GSTR 3B and GSTR 1. If there will be any difference, then you need to identify the reasons of the differences. There may be chances in your audited financial statement, you have taken the sales from trading account. In profit and loss account, there is other income like commission, like accounting maintenance charges. The same has not been included in your audited turnover. So this will give you a difference. So you need to put the reason. So that in future, if departmental authority will ask, you need not to make any extra efforts. You just need to check your internal audit report. You also need to go for taxable value, IGST, CGST, SGST reconciliation as per GSTR 1, 3B and books of accounts. Sir, how will get the books of accounts turnover? So for that purpose, you need to generate the consolidated cumulative GSTR 3B from the accounting software, so that you will find out each and everything. Next slide, reconciliation of output calculation. Sir, in our first sheet, we have done the consolidated reconciliation. Now, suppose next step is optional. If you don't found any differences here, then no need to go for next reconciliation, because no issue is there. Your 3B1 and books are reconciling. But suppose if there is difference, then you need to identify the month due to which the difference is coming. Okay, so for that purpose, you need to put the month-wise GST sales as per books of accounts, as per GSTR 1, as per GSTR 3B, and we have inserted the formula so that automatically the difference will be reflected in these sheets. Okay, so for comparison, you need to take the books 3B monthly basis. Okay, if you found any differences in our turnover reconciliation, then you need to demand the month-wise GSTR 3B. Compare it with month-wise GSTR 1 and GSTR 3B on GST in common portal. You will find out the difference. Accordingly, we'll take the necessary actions. Next, bifurcation of input tax credit. Sir, as we all know that while filing our GSTR 9 and 9C, we also need to provide the bifurcation of input tax credit as capital goods, input and input service. So we may prepare this bifurcation before going for 9 and 9C during our internal audit, so that we can cross verify at the time of 9 and 9C and will get direct figure at the time of filing of GSTR 9 and 9C. So what we need to do? Just as per books of accounts, you need to check for capital goods ITC, check the fixed assets chart. If any addition, take the input tax credit of the addition, that will be treated as your capital goods. Total ITC will be there in your GSTR 3B. Just reduce the capital goods related ITC. So your total ITC on account of input and input service will be there. The same you need to put in your GSTR 9 return. Or suppose you are doing this internal audit after GSTR 9, then you may find out some differences. Or if you have made this internal audit exercise before 9 and 9C, before income tax audit, then as per books your data is here. Again at the time of 9 and 9C you need to make the calculation, so that if you found any differences you may ask with your client any additional entry have you made. ITC bifurcation as per books of accounts, okay, we need to do accordingly. Sir, we also need to check the depreciation has been checked or not. That is, whether the any fixed assets has been added, or if fixed assets has been added during the year, then the depreciation has been claimed on taxable value or invoice value. That we need to check. If claimed on taxable value, then only you will be eligible to claim the input tax credit. Otherwise, you will not be eligible to claim the ITC. That also we need to ensure. Rule number 42, 43, as we all know, that if the taxpayer is involved in taxable as well as exempted supply, and common ITC will be there. Okay, suppose taxpayer has two product, X which is exempted, Y which is taxable, and for making or manufacturing of X and Y, tax is using one common material which is taxable. Suppose material A. In that case, A used for X and Y both. On X, taxpayer is not paying the taxes because the same is exempted. On Y, taxpayer is paying the taxes. So in that case, try to understand 100% ITC will not be eligible, because we all know very well that if you are paying the output tax, then only you will be eligible to claim the ITC. So in that case, ITC reversal is required. So for input and input service, rule number 42, for capital goods, rule number 43 is here. You also need to check that during the particular period for which you are going for the audit, whether any blocked credit has been claimed or not, section 17 subsection 5. Because in section 17 subsection 5 we have a list: motor vehicles, related insurance, vessels, aircraft, food and beverages. So we need to check whether these expenditure are there, and if these expenditure are there, then whether the ITC has been claimed or not, or the same has been shown in section 17 subsection 5 blocked credit or not. We also need to go for the input closing balance reconciliation. I can say this is the most important reconciliation. You may take the closing balance of input tax credit as per your books of accounts as on the date on which you are going for the internal audit, and you need to take the closing balance from GST and common portal as on the same date. So if you found any variation, then you need to go for the reconciliation. Yes, in 90% cases you will found the differences, but the point is that we need to go for the reconciliation. Reconciliation of input tax credit. Sir, ITC reconciliation you should do on monthly basis, because there may be chances of variation or high chances for the variation. So what you need to do, as you are taking the GSTR 3B on monthly basis from your client, just insert the books of accounts ITC from GSTR 3B generated. Just take the GSTR 2B ITC from the GST and common portal and 3B from GST and common portal, and if you found any differences, then go for the reconciliation. Because there may be chances some ITC which is reflected in 2B, but you have not received the goods, so you have not claimed the input tax credit. Okay, so this will be one of the reason for differences. So these type of differences will be there. We need to identify the reasons and we need to highlight the reasons over here, so that in future we can easily identify the reasons as well. We need not to give extra time for the reconciliation, as RCM is applicable on certain expenditures. Okay, section 9 subsection 3, section 9 subsection 4. So what we have done, we have prepared an exclusive list on which the RCM is applicable. So you just need to check whether GTA service related expenditure is there in profit and loss account. Yes, then applicable. RCM paid, amount on which RCM paid. तो आपका GT का एक्सपेंडिचर आपने अपने फाइनेंशियल स्टेटमेंट में कितना बुक किया है? What amount you have booked in your financial statement with GT expenditure, the amount on which you have RCM paid. So difference will be there, so that you can easily identify. The same, you need to check any legal advocate fees you have booked in your books of accounts. Yes, whether you have paid RCM. Yes, just compare the amount. Same, services provided by arbitral tribunal, services supplied by the central government, state government, land taken, services received from director. In case of companies, we should be very much careful. Okay, so these are the line item for which the RCM will be applicable. So we can easily check, we can easily go for the analysis. RCM reconciliation. Sir, as we all know that the RCM will also reflected in GSTR 2B. Okay, so we need to take the RCM figure, okay, from GSTR 2B, and also we need to take the RCM figure from GSTR 3B, because in our GSTR 3B we have paid the reverse charge mechanism taxes. So we need to check it monthly, and we also need to take the reverse charge mechanism as per books of accounts. How will get from books of accounts? Sir, in our books of accounts, we all know very well that when we'll generate the monthly GSTR 3B, we'll get the RCM related figures. Compare the books related figure with GSTR 3B, and if there will be any differences, then we may identify, highlight the differences. This is tax payable under reverse charge mechanism. Second, जो हम टैक्स पे कर रहे हैं अंडर रिवर्स चार्ज मैकेनिज्म, वी विल बी एलिजिबल टू क्लेम द input tax credit for the same amount. So we need to go for that type of reconciliation. ITC as per books of accounts under reverse charge mechanism, ITC as per GSTR 3B and differences. Sir, RCM table is okay for everyone? Just let me know once. Are you in view that this particular tool will be helpful for you in your day-to-day GST practice? Just let me know once, sir. And yes, if you have any further queries, any further questions regarding this particular tool, you may directly connect with us on the given WhatsApp number. Okay, I have mentioned the WhatsApp number as well. You may connect on this particular number. So next, refund related queries. Suppose during the particular financial year or during the particular period for which we are going for the internal audit, whether any refund has been claimed, then we need to select the structure of refund, whether the refund is under inverted duty structure, whether the refund is under export. Amount of refund we need to highlight, period for which you have claimed the refund, duty drawback if any claimed through the financial statement, you can easily find out the amount of duty drawback. And as we all know, if the duty drawback has been claimed, then the taxpayer will not be eligible to file a refund application in case of export. Data reconciled from IEC Get portal, that also we need to ensure. Then we have given the calculation formula that you have already claimed the refund under inverted duty structure. Now through this particular formula, you can easily identify that the refund has been claimed perfectly or not. So for that purpose, what you need to do, inverted duty structure, adjusted total turnover, multiplied by tax payable on inverted duty structure, multiplied by net ITC. Formula we have already inserted, so automatically the figure will come here, maximum eligible amount. The same formula we have provided for export. When you will put the figures, automatically the maximum eligible amount will be there. You can easily compare with the refund amount which has been received, so that if you found any variation, you may go for a action. If during the particular financial year the person has made the export, in that case, yes, we need to go for this. Okay, suppose if IEC Get portal से आपने सब कुछ reconcile कर लिया है and complete data has been reconciled with IEC Get portal, then no need of invoice wise reconciliation. Okay, because here we have mentioned clearly data reconciled from IEC Get portal. If you are putting yes, then the next slide will be not applicable. But if you have not if you are not able to reconcile the figures from IEC Get portal, then you need to go for shipping bill wise reconciliation. You need to put the shipping bill as per books of accounts, shipping bill as per IEC Get portal. Accordingly, difference will be automatically there, so that you may connect your CHA agent that why there is difference. Have you put any wrong data on custom portal? Hence, there is a reconciliation related issues on GST and common portal. That type of exercise we may do. Okay, and suppose you are going for an internal audit of 6 months and you found differences in 1 month only, then you need to prepare the invoice wise, shipping bill wise entry for 1 month only. For remaining 5 months, it's already done. Creditors inquiry, sir, you need to put the creditors list here. Outstanding more than 180 days. Number of days you need to select. Suppose outstanding more than 180 days, yes, you need to put. Accordingly, you need to put the number of days. Suppose 185. In that case, ITC reversed or not, कितनी ITC आपने reclaim की या फिर नहीं की, और interest pay किया या फिर नहीं किया, that you need to ensure. This sheet you may refer in the next financial year as well, or next internal audit as well, so that you can easily identify that during the last year there were ITC reversal on account of non-payment to the creditors. Now, whether we have made the payment or not, that we need to check, and if the payment has been made, then ITC has been reclaimed or not. So your complete creditors reconciliation will also be there. Okay, and just think once that you are doing this particular exercise on half yearly basis, it will take very less amount of time. and you are providing an exclusive report to your client as well. That's all. This is the data which is very special for you. So it will create impact. Okay. Here we have put our logo. You may remove this logo and put your own logo as well. E-way bill reconciliation. As we all know, nowadays departmental authorities issuing many notices on account of e-way bill only. Okay, so we need to check the e-way bill generated as per books of accounts, because client is generating the e-way bill from the accounting software, and accounting software is generating the report on monthly basis very easily. So we need to take the e-way bill generated as per books of accounts. The e-way bill as per GST and common portal, you can easily check from e-way bill portal, and if there is any difference, then we need to identify. If difference is of very small amount, then it is completely okay. But if there is a huge amount difference, then it is an indication that there is some issues. So we need to take the actions. Sir, as we all know, section 49 subsection 12 is the most important section. Okay, every month if your turnover crosses 50 lakh rupees, then you need to pay your 1% of total tax liability in cash. If you have not paid, in that case, in future department may ask for payment 1% cash, and you will not be eligible for ITC as well. So this is again a very important thing which we need to keep in our mind. So we need to put the turnover for April month, May month, and we need to select that if your turnover crosses the limit of 50 lakh rupees, yes or no, 1% paid in cash, yes or no. But there are some exceptions. Refund claimed during the previous financial year, or income tax paid more than 1 lakh during 2 financial year, or cumulative excess payment ho gaya, then this particular provision is not applicable. So accordingly, we need to select that whether you have these exceptional criteria or not. So that very easily, sir, in case of any audit, assessment, or scrutiny, you may provide this sheet to departmental authority that, sir, 4912 are not applicable on us. This is the reason. And you also have the data, so you will be in a confidence. Analysis of profit and loss account. Sir, you need to put the line item of your profit and loss account, income and expenditure. You need to select that whether GST is applicable or what is the GST rate, whether GST has been paid or not. So from income perspective, you need to check that whether GST has been paid. From expenditure perspective, you need to check whether RCM has been paid if applicable, or whether ITC reversal has been done if ineligible. We have also provided the complete calculation of rule number 42. Okay. The same is not applicable if the taxpayer is exclusively dealing in taxable products, but taxpayer is dealing in taxable as well as exempted products, then rule number 42, 43 will be applicable. And also we have given a complete checklist that after you have checked the trends, you have checked the turnover reconciliation, category wise sales analysis done, RCM tax paid properly, income tax input claimed properly, income tax input tax credit bifurcation आपने check किया नहीं किया, refund 42 43 calculation checked, section 17 subsection 5 reversal checked. So all those things we have done. At the end, we are also taking a second confirmation that these things you have done or not, and you need to select accordingly yes or no. Okay, so that it will give you a confirmation that yes, these things we have done and we are sure about that. Then we have an invoice wise reconciliation. Sir, you need to go for an invoice wise reconciliation, GSTR 2B and books. So that suppose if you found some differences, there may be chances some invoices which is there in GSTR 2B but not in your books of accounts. So you need to identify that these invoices are not related to us. There may be chances some invoices which is there in your books of accounts not in 2B. We need to suggest our client, you need to go for corrective measures. You need to ask with that particular portion. There may be chances some invoices which is there in 2B with different date, but in our books of accounts we have booked on different date. So we need to check why there is variation. So these type of invoice wise reconciliation we also need to check. The RCM, sir, as we all know in GSTR 2B we are getting the RCM related entries as well. So we need to check whether the RCM which is showing in GSTR 2B, the same as paid in books of accounts or not, invoice wise we can easily verify. We also need to check the invoices which is not found in GSTR 2B, so that we can provide a separate sheet to our client that, sir, you need to collect with these particular persons, and at the end we also need to provide areas for important. This is a very important segment of this particular report in which we are providing the area where some improvement is required. There may be chances, just for example, in GSTR 2B different date, in books of accounts different date. So we need to suggest our client that entry should be as per GSTR 2B dates. There may be chances in GSTR 2B invoice number is 004/2025, but client is booking in books of accounts 004 only. So we need to suggest you need to go for this. There may be chances the return which is generated from books of accounts have difference from the particular profit and loss account. We need to suggest there is requirement of improvement. When you are generating the consolidated GSTR 3B, there are huge number of errors which is still pending in books of accounts. We need to provide the suggestion. So, sir, conclusively, I can say when you will prepare this type of report and we will discuss the things with your client, it will give a impact. Your client will also think that yes, my chartered accountant, my GST consultant, my tax practitioner is making extra efforts for me. These are the pre-checkup you have already done. And yes, it will also give you a confidence at the time of departmental audit, departmental scrutiny, and any other proceedings. So we should go for this particular type of exercise. We should provide our clients something extra. We should do some innovative, and this is a part of this. Okay. So I request through this particular demo session, through this particular hands-on session, I have guided you that how we need to put the figures, how we need to put the figures in our report. Okay. If you have any further query, feel free to connect on this WhatsApp number. Okay. My team will connect with you definitely and provide the response in a very well manner. So I request each one of you, if you have any query, any concern, you may put it in the chat box. Thank you once again for joining the session. Thank you for listening with us. We'll meet in another session, another webinar, another workshop. And yes, stay connected with us. Thank you.